Hey guys, welcome back on the channel. So this is the fifth week doing these high risk pools on PancakeSwap using Solana. You can also yield farm on many other very profitable farms on PancakeSwap, but Solana seems to be the ones handing out the highest yield. So today I already claimed over $6, so everything put together we're looking at more than that in yield in 24 hours. That has been the average. Pretty much depends how much it goes out of range, how much volume there is in the market, but the thing is that these farms are highly incentivized. So you see, even if there's not so much volume, the cake incentives will make up for it. Whenever you get incentives in a liquidity pool, you just get them as long as you are in range, while the trade fees will depend on volume and also your share of the pool, etc. Of course, the cake pools also depend on your share of the pool. That also determines how much you get in incentives, but pretty much you are in range, you get rewards. So in overall value, the overall LP positions are worth $40 less than compared with last week. So I locked in quite a lot in permanent loss because I'm playing with the very tight ranges, and especially when the prices fall, and if you want to keep earning those yields, you'll have to close positions and open positions. That's the high risk aspect of it, so you lock in a ton of impermanent loss. So the good news are that everything put together, we're still up. So let me show you here in cake. Okay, so let's go down. It has 32.9 cake. Okay, so let me go here on swap. Okay, so we got 32.9, actually a bit over that because there's still that yield that I just showed you, which I haven't yet harvested. In dollars, we can see that this is over $81. And right now, cake's price is not all that good because one cake, well, it's still good, but it has been going a little bit down from prior weeks, while today it's worth $2.49 per cake. In past weeks, it has been worth higher, like 2.6, 2.7, sometimes even above 3. When I started this video series, cake was worth over $3, 3.2, something like that. And right now, let me show you also something very interesting. The pending yield, as you can see, $4.9, and that in cake is 3.9. So I've been noticing that as weeks go by, I've been yielding less cake, but more of these other tokens from the pools. So if you compare this and go watch my first videos, I did a whole playlist with them. I would have like 95 to 98% of all the yield paid in cake, while now it's paid a bit less in cake and more in the other tokens. I mean, you can always claim your yield, put that into some other wallet or lock that into stables for de-risking. You can also de-risk by sending all that yield and turn it into Bitcoin, for example. But also one of the things that I have been doing with the profits from these pools is once in a while, topping it up. So right now with the profits from today's week, probably I'm going to put something at around half of those $80 back into these pools to top them up. That's a regular practice that I do advise you to do. And then some of it will be going to other liquidity pools. What I'm thinking to do is turn this into blue chip assets, as I've mentioned in many of my past videos. Actually, let's go here on PancakeSwap's X post. So this is a post from a couple days ago. Wix Farms Spotlight, not only on Solana now, but in multiple chains. So these are all great options to deploy liquidity and turn that yield from high risk pools into some more solid stuff. While the APRs here are still quite good, and you can have higher APRs if you play with tighter ranges. Once again, this is an average, but likely it will be very hard to stay with that same average of over 4% a day, 5% a day that high risk pools have been yielding consistently. On the other hand, these are blue chip asset pools, so they are incredibly more solid as an option for us to provide liquidity. Now what I'm thinking about doing is taking the yield from these positions, mostly in the shape of cake. Some of the other yield actually I've been putting back into the pool just to offset a little bit of the impermanent loss. It does help somewhat, and probably we would be with an even lower value if that wouldn't be the case and if I had not been keeping on adding some of those fees back into the pools. But also it goes to show that the cake that we see here, it's not all of the yield from the pools. So everything put together, I would say these pools have generated this week something at around $90. So we're talking about above 30% of yield this week. And of course, the whole point of the video is just showing you how profitable these things can be, but potentially we want to be more active, and instead of just crewing this cake, we want to do something else, like keep topping up the pools, potentially even finding other liquidity pools here to diversify risk, or even having some more solid stuff. Like for example, I don't consider Jito to be that high risk of a pool. It's still high risk when compared with Solana, yes, but it's not high risk as when compared with Launchcoin, for example. But if we come here under liquidity, I can also point you out with what I think in many cases are high risk pools, yes, but they are still very liquid and very strong in the Solana ecosystem. For example, with Dog with Hat, great option because it's a meme coin, but it has a lot of liquidity, a lot of backing from the community. There's a lot of holders and it has been performing quite well. Actually, some of this that I have here on Launchcoin in the beginning of the week I had in the Dog with pool, and actually in the past week I showed you in my video, I believe I was already holding a position of Dog with. The thing is that APRs in this one are over 3000%, and also trade fees APRs very close to 1700%. And compared with Dog with, I noticed the APR going down, so I did make the decision, took the liquidity from there, put it into some other pool. But back here into liquidity pools, there's nice ones like Dog with. What else can we have here? Like Trump is also a very liquid asset, one of the most liquid meme coins on Solana, 358% APR right now. You can even get higher than this. This is actually a pool that I did consider to deploy liquidity, but then Launchcoin was performing and is performing really good, so I just kept the liquidity on that pool. USDC also paired with SPX, the same thing. It's a meme coin that has been around for a while. I don't think it will crash. I mentioned this in some of my other videos, Popcat, Pengu as well, Bonk, another great option. These are all high risk, right? But they are not as high risk as, for example, something like Uranus. But regardless, what I'm going to do from here on is take some of the fees, top up the pools of course, and then here on volume, let's sort this out. I'm probably going to put something here, probably in USDT, because the APR here is a bit higher. And I know for a fact that these Solana pools, they can yield you something at around 1% a day, if not more. So while they are a very reliable liquidity pair and they are a blue chip asset, much stronger than any of the other pools that I've pointed out so far, they still have a really good performance for the short term in order to just stack some yield. But if you want to avoid volatility altogether, I keep pointing this pool out, and this is in case some new people are watching the video. This is a stablecoin pair. APR very close to 20%. And then there's also like Bitcoin pools like this one, Coinbase's Bitcoin USDC, 125% APR. And I know there's a USDT Bitcoin pool paying even higher. Here it is, 150% APR. We could also, for example, go on Jupiter. Jupiter just launched their lending markets, and for example, they have some vaults here. So you go on the multiply tab, and there's some vaults here that can pay up with an APY of triple digits. Like this one is insane, GLP USDC. So potentially we could take all of that yield from the pools, buy JLP, and then the vault does everything. You just have to determine what leverage you want to use. The higher it is, the bigger the risk, of course, but you supply GLP, you borrow USDC against it, and that USDC is then once again used to buy more GLP, increasing your supply, your collateral, which will then again increase how much USDC you can borrow. And every time you do that, deposit GLP, borrow USDC, then buy more GLP to supply, that is one loop. You can go up to 5.27x. Of course, be responsible if you want to do that, but this is going to be 100% passive, and the max net APY is just off the chart. These are just options, okay? What I'm thinking about doing is actually, like I said, put the yield, most of it at least, into some of these more solid pools, and in the coming days you can expect more videos about it, because actually what I already did was with some of that yield from prior weeks, I started opening other pools on Base. Now this is still high risk. We're talking about ETH paired with SPX, but the APR at times is over 1000%. And the farm APR is actually what I'm looking for here. Like I said, at times earlier today I checked it and it was over 1000%. So the farm APR was at around 900 something percent. So this is something that has been active for a while, and for example in the past couple days it already earned almost 1k. All high risk stuff once again, but there's great pools also on base. That's going to be my main focus on the videos that I will upload on the upcoming days. So if you want to check that out, how to turn those high risk pools into something more solid, stay tuned. I'm going to show you all of that for complete beginners even. And by the way, in the upcoming videos probably I will touch upon also a little bit on back testing and looking at charts and setting ranges, all of that. It's not rocket science, guys. Anyone can do this. There's a lot of people that make a living out of yield farming, and that's just the potential that crypto brings to the table. And then on top of that, the yield that you can take from these pools, you can also off-ramp it already with other crypto protocols. I did some videos already covering some of those. If you want to see that, let me know in the comments. And essentially that's what I wanted to share with you guys. I think it's pretty much already obvious. I've been doing these high risk pools for 5 weeks, showing you how you can very quickly in a bull market, taking some extremely high risk, yeah, but with some control over it, make some very fast gains, turn that high risk pools into something more solid. So this is optimal for starting with a small position and turn it as fast as possible into something like Solana with Rack Bitcoin, Solana USDT, which the APR is a bit lower, but still very much competitive. And then by using these blue chip pools, the whole point of it is taking some risk off the table and also play with wider ranges to anticipate some potential price appreciation of Ethereum, of Bitcoin, of Solana. We are going to make a little bit of a trade-off by lowering our yield that we can claim every day to have something that is potentially going to appreciate in price in the near future, and that can make up for it. Also, a wide range will definitely be beneficial for the most part because it's less management intensive and we can pick up a whole more volume. For example, let's go here on base. Let's see the top pool. Here it is, wrap ETH USDC. So now let's go with a weekly candle on this one. Alright, so we look at this chart and then we can set up ranges, like for example from something like from here to here. It's a very wide range, but we can get most of this volume, right? And that's the whole point of providing liquidity, getting those fees into our wallets. So that's going to be the focus from here on. Take that yield, put into these type of pools with wider ranges, which is definitely much more passive. It's my preferred thing to do actually, and they can still very much earn us some really nice yield because we pick up all of this volume, especially on the way up. But yeah, I'll share more about that in future videos, so stay tuned for that. I'm going to wrap this one up, guys. If you have any questions, let me know in the comments, okay? And also sometimes I get asked if I have a community. I don't, but if you want to learn more about these things, check the links down below for the Underdog investor group. I am affiliated with them, but those guys do know to play the game. I still learn myself quite a lot with them. My referral link will get you 20% off on your first month. I highly advise you to join in, especially if you are willing to put some money on the table and pay in order to speed up the learning curve of yield farming, because anyone can learn this thing, guys. So if you want to take part of this financial revolution that is crypto, definitely go check out that group. If you have any questions, let me know in the comments. Thank you for watching. Like and subscribe if you enjoyed this type of content. Take care, keep exploring crypto. I'll see you on the next one.